Hello and welcome to Spark Accounting Solutions, the show where we answer your questions. I'm here with Julie Babcock Hyde, CPA, CFM, Profit First Professional, and the founder of Spark Accounting Solutions. And Julie, we are going to give some pretty important information today on the updates of the PPP forgiveness loan. And so thank you for taking your time to do this.
Yeah, I am excited to talk about this, but I want to start all of this with a big asterisk, okay?
Okay.
Today is May 29th.
Yes.
What we're talking about is what we know through today.
Fair enough.
What we know so far is things are changing regularly. I also want to remind everybody that Facebook Lives, YouTube videos are not a substitution for getting advice from your own accountant. This information that I'm giving today is meant to be general in nature, and you really need to be working with a professional right now to help you get through this. These loans are up to $10 million and they're forgivable. You do not want to mess this up. Truthfully. So
Right.
get some help. Get some help with this process. Get some professional advice if you have questions about what things mean. Read the rules yourself if you're trying to do it yourself. Don't just take what you hear on the internet to be the gospel.
So okay, I think that's
my
great.
asterisk.
Yes, that was a really good one. I would actually underline and highlight that as well.
It's a good idea.
Yeah, bold and then italicize, just all the things that you can do. That's very, very important. Okay, even so, let's jump in and talk about what we know to date about the PPP forgiveness loan.
Okay, we had new changes come out last week, and so let's walk through what those look like. So the first thing that I think everybody needs to know, number one, is that wages for owner employees and self-employed are limited. Now, we didn't know this before. We've got official documentation of exactly what's happening with this, and employee owners and self-employed folks can only take 8 weeks out of 52 weeks of last year's wages.
Okay.
So if you're an owner employee, that means you're getting a W-2 from the business. Either you own a C Corp, you own an S Corp, you're getting a W-2. And so you're going to take your W-2 wages from last year plus any pre-tax deferrals for like your simple IRA or your 401k. And that's going to be your wages, times it by 8 weeks, divide it by 52 weeks. That's your max. But we're going to talk about a second max that comes into play as well. Okay. But if you're self-employed, Schedule C, you're going to look at your 2019 tax return. You're going to look at your Schedule C income. You're going to times that by 8 weeks, divide it by 52 weeks. That's your max. And if you were a general partner in a partnership, you're going to look at your self-employment income from the partnership, times it by 8, divide it by 52. So that's one possible max that you have. But there's a second rule that comes into play. And we already knew this one. Nobody can get forgiven more than $100,000 worth of wages. So that's annualized though. So the real number is 100,000 times 8 divided by 52. Are we tired of that ratio yet?
It's like hearing a jingle on the radio. It's like pretty soon we're just going to be reciting it, you know.
I hope not. So that is $15,385 is the other max. So let's say you made $120,000 last year, owner employee. You are not going to get 120,000 times 8 divided by 52. You're going to get 100,000 times 8 divided by 52 because you can't go over that 100,000.
Gotcha. Okay.
Now, a lot of the companies that are doing this are small businesses. A lot of those people are not necessarily making that much money right now. The $100,000 cap is probably enough for most people, but there are businesses out there where we've got people making more than that. We need to think about those two and how they interplay. It's the lesser of is the max that you can do.
Okay.
So that's number one.
That's number one. That's a big number one.
Yes.
The more you know.
Yeah. But I do want to, one other thing on that, because there's been a lot of other questions about qualified payroll. And people have asked about hazard pay, bonuses, commissions. Can we pay them? And the answer is yes. For your other employees, yes, we still have the 15,385 for the 100,000 limit. We still got the owner's caps on there. But you can pay those, and those can count for your qualified payroll costs, and they can be forgivable as long as they are not over those caps. Lots of math.
Lots of math. And for those of us who didn't do well in accounting in their first year of college, hypothetically speaking.
Yes, those people really should be reaching out for help right now.
Reaching out for the professional help. Yes, for sure.
Absolutely.
Okay, let's move on to number 2.
Okay, so number 2, we have always heard that we had 8 weeks covered period starting with the date that the loan was funded. And good news is they changed the rules.
Oh, this is good news.
You have a little bit of an option here.
Okay.
So now you've got an alternative covered period that you can use just for payroll. Okay. So you can either do the 8 weeks that your loan was funded, or you can start your 8 weeks at the start of your next pay cycle. So if you got funded on April 3rd and you process payroll on the 10th, and then your next payroll cycle started April 7th or something, just picking a random date, and went for the 2 weeks after that, you could start on April 7th, even though you got funded on the 3rd, so that things kind of line up with your payroll cycle.
Ooh, okay. So I have a question for you.
Yes.
What about the businesses that were shut down, right? And they had to lay off all their employees, and now they're reopening, but it's been 6 weeks since they were funded.
Right now, we're going to talk more about this when we get to number 5, but right now, those are the 2 8-week periods you have to choose from.
Okay.
Starting with the funding date, or starting on the first payroll cycle after your covered period starts.
All
so
right.
if you got funded on April 3rd, it's going to be whenever your next payroll cycle starts after that. Those are your 2 options, and that's it.
That's it.
But there is another little piece of good news in here. They've also said that if there is a piece in your covered period where you have employees working, but the paycheck date happens to be just after the covered period, you can use incurred payroll during that time frame and include that, even though it wasn't paid in the 8 weeks. So that gives you, kind of almost like the full 8 weeks and then a little extra at the end.
Okay.
So make sure you read those rules carefully. Make sure the person that's doing calculations for you knows about those, because that gives you a little bit more wiggle room.
All right.
So that's number 2.
Number 2. Number 3. I like this one because it uses the word simplified, and I hope it's not just a clickbait word.
It is. So for FTE calculations for most small businesses, I think this is going to be the most time-consuming portion of your forgiveness application. And the reason why is because there's so many different choices around this. But before we get into those, I want to remind you why this FTE count is important. Remember that the goal of this program was to keep people employed. And so they're looking at your base period FTE count, and they're comparing it to your cover period FTE count. And they want to make sure that it didn't drop. You didn't lay anybody off. Everybody stayed employed. Everybody was still getting a paycheck, or that you were fully hired everybody back by June 30th. They're looking at that and saying, you know what, if your FTE count dropped by 25%, your forgiveness potentially drops by 25%. And so this is important. Now, they did offer a simplified method, but there is nothing simple about this. You've got a bunch of different choices that you have to make as you're going through this process, and a bunch of potential calculations that you have to do. The first decision you have to make is, what is the right base period to use? So they gave you 3 options. Well, most people have 2 options. Seasonal employers have 3 options. So you can look at the period from 2/15 of 2019 through 6/30 of 2019 and calculate how many FTEs you had. FTE stands for full-time equivalent. And so if somebody worked 40 hours a week, they count as one full-time equivalent. If somebody worked 20 hours a week, they count as half of a full-time equivalent. Okay. So first base period is 215 through 630 of 2019. The second option is 1 through 229 of 2020. Where were you at for FTEs then? And if you're seasonal, you have a third choice, which is any 12 weeks during the period of, I have to look at the dates, May 1st through September 15th of 2019. So potentially you're looking at calculating FTEs for 3 different periods if you're seasonal, and even more potentially if you're trying to pick the right 12 weeks if you're seasonal, for that first base period. Once you've picked the base period, you want to pick whichever one is the lowest because you want the lowest bar to jump over. Your second choice is, what is that 8-week cover period that you're going to pick? Are you going to do the standard that starts with the funding date, or are you going to do the alternate? And you're going to have to do the pros and cons and see which one of those works out best for your company for forgiveness. And then the last piece you have to look at is how are you going to calculate your FTEs? And this is where the simplified method comes in.
Okay, good.
So the SBA said, okay, you can use a simplified method. So if you have a full-time employee, they count as 1. And if you have a part-time employee, they count as 0.5. That means somebody that works 10 hours a week counts as 0.5, and somebody that works 36 hours a week counts as 0.5. So it may or may not work to your benefit to use the simplified method. Because if you have a bunch, you have to go through the math and figure out how to get the numbers you need to get this all forgiven. If you're not using the simplified method, you're going to take the number of hours worked divided by 40, and that fraction, that ratio that you get is the number that you're going to use there. Again, this is going to be the most complicated part, I think, for a lot of businesses, because you have so many different options, and we got 3 choices, and that first way, there's 2 different ways to calculate all 3 of those choices: the simplified way or the full way, right? And then you've got the base period versus the straight 8 weeks, the alternate base period. You got to calculate that one both ways potentially. And then, and yeah, it's crazy. It's crazy.
Yeah, this is why we're glad we have professionals on the job.
Exactly.
Yeah.
This is important to get right. This is important to maximize for you. If you're a one-person shop, this is not going to be hard for you. If your people have been doing the same thing the whole time, this is not going to be hard for you. But if you have a fluctuating workforce, if you've had to lay people off and bring people back, this is going to be trickier calculation for you. And you want to make sure that you get it right and look at all the options to come up with what's best.
Okay, perfect. We do have one quick question before
Yeah.
we move on. Yeah. Alicia wants to know, I want to make sure I heard you correctly. Owner employees cannot receive hazard pay?
They can receive hazard pay, but they're limited by their prior year compensation. And so that's a new thing that's come out. And so if you need to go through those calculations, reach out and we will help you with that.
Okay, perfect. Alicia, if you have any follow-on questions, please make sure and post those in the comments. And I'd like to invite anyone, if you have questions, throw it in the comments and we'll get we'll get those questions answered. Okay, let's move on to number 4.
Number 4 is, we do know what the forgiveness application looks like.
Okay.
And I don't know if this has changed, truthfully, but it's out there. It's 11 pages long. 3 of them have numbers that you have to fill into them once you do the calculation, and the rest of them are instructions. So if you are not somebody that likes to manually fill out tax forms, you are probably also not going to like manually filling this out. So again, I can't stress enough, if you don't like to do this, If you don't like to do this stuff, you're not good at this stuff, get help. Because it's going to be important. Truthfully, when you look at the forgiveness versus not forgiveness, getting this right is important. And you've got better things to do right now as a business owner. You need to keep your business operating. You need to keep making money, and let somebody help you with this.
Yes.
Now, what's funny is I've been hearing from other colleagues who've sat in on some SBA webinars about this that have basically said, yeah, the application's out, but it's probably going to change. Don't start doing anything with it yet.
And do you agree with that?
Probably, because that takes us to number 5.
Okay, here we go.
And number 5 is the rules are probably going to change again. And I think that's an important thing to know. And we've seen this, like, in regards to the application. If you think about how many times the original application for the loan changed over the course of a few days until it went live, there were a lot of changes. And so I'm expecting that for the application as well. But small businesses have been heard as they've been saying, you know what, we can't have everybody hired back yet. We need more time. 75% is not the right percentage for payroll. You know, we've got a lot of rent that we need to pay. You need to change the rules up a little bit. So Congress has heard that. Both the Senate and the House have been talking about it. The House actually passed the PPP Flexibility Act yesterday. And I want to remind you that, you know, just the House passing it doesn't make it a law yet. But they changed that proposed law. Basically says companies will have 24 weeks to spend the money. They can spend up to 60%. Only 60% has to be payroll, not 75%. And they've changed the kind of reference date. So we've been talking about June 30th for like having to have everybody hired back. And June 30th is also the last day you can apply for a PPP loan. And that PPP Flexibility Act actually changed the reference date to 12/31 of 2020, which gives people more time to apply, more time to spend the money, more flexibility about how they spend the money, and more time to plan what the heck they're going to do with this money. And so I truly think something's going to happen around that, but I don't know what. The Senate has been talking about giving people 16 weeks. The House went all the way to 24 weeks. It'll be very interesting to see if they come to an agreement, get something passed in law. I think what's really stressful for small businesses right now, if you got this loan when this first opened on April 3rd, your 8 weeks ended yesterday. The game's over for you unless these rules change. And that's been really frustrating for small businesses, not knowing exactly what they should do, not knowing what the rules are. And I just really hope right now that our government can get it together and our friends in DC can say, this is the plan, these are the rules, so that small business owners can make the right decision for their business.
Yes, definitely. And we can't, at the top of the show, you did do an asterisk and we highlighted and underscored and italicized it. Yes. We cannot stress enough that, reach out to a professional. If you want to talk to Julie, go ahead and go to the Facebook page. There's a contact us button that will go straight to Julie. Or you can leave a comment here, even if you're watching the replay. Leave a comment, ask a question. I want to give a shout out to Matthew Fulton, who did a great summary of some of the things you talked about in the first few steps, Julie. It's a long comment, so it would take up the whole screen, so I can't share it. But thank you for that. And yes, he says right now, he said, the suggested change is not fair to employers who made decisions based on the existing rules. Well,
yeah. I think this is the most frustrating thing about this program right now, and also, tax law history over the last couple years. I'm going to be snarky for a second. I don't usually do that, but we've seen so many things where the rules get changed after the game is already over, and it's not fun to play Monopoly and think you won and then found out that you lost, actually, because somebody changed the rules at the end of the game. And I just cannot stress enough to, to our friends in DC, we need our small businesses need to know what the rules are. We as advisors need to know what the rules are so that we can help get our clients the outcome that they are looking for and
Yes.
make this program work the way it was intended.
Yes.
So
Another exclamation point, asterisk, underscore, highlight to that.
exactly.
So yeah,
And that's
very good.
I'll get off my soapbox now, but
Well, I think it's appropriate. I can't even imagine what all of you advisors are going through, trying to just keep up so you can appropriately, and accurately advise your clients. So thank you for all of that. And
I do want to give a total shout out to Matthew Fulton. He's been putting out some really great training stuff on his business page as
great.
well
Awesome.
for small businesses learning about PPP and what they need to do. So
awesome. Very good. We have one last comment from Alicia. Agreed, especially if employers are paying on one thing, rule change, and now that percentage is off. I can understand that. We have been rather rigid on what we're doing because we anticipated a rule change. Wow. That's great. Yeah. I like this reminder. This is really great. Please tell everyone to be nice and patient with their accountants and bookkeepers. We're trying to stay educated to help out. Yes, definitely. Great reminder. That's a perfect way to end. Julie, thank you so much for your time. Everybody, thank you for watching. Again, leave a comment, reach out on the Facebook page, contact us at Spark Accounting Solutions, and Julie will get that question and assist you as much as possible.
thank you.
Thank you so much. Bye, everybody.